Trump's trade policies have thrown a wrench into the operations of Japan's major corporations, creating a stark divide in how they are responding to tariffs. More specifically, while Toyota has drastically cut its profit expectations, firms like Sony and Honda claim the reality is not as grim as initially thought. Let's unpack the latest developments in Japan's economy, focusing on how the U.S. tariffs are influencing notable companies and what implications these policies could have on the automotive and technology sectors. On August 7, 2025, the impact of President Donald Trump's tariffs became a central theme for Japan's economy, as firms like Toyota Motor were forced to reassess their profit forecasts. Toyota revealed that it is anticipating a significant downturn, slashing its annual profit estimate by 16% due to the compounded effects of tariffs and a strengthening yen. In stark contrast, Sony and Honda are voicing optimism, suggesting that the real impact of tariffs is less severe than they had previously anticipated. As these tariffs took effect, Japanese enterprises showed a mixed response. Major players in the economy are grappling with the unpredictability associated with these tariffs and the fluctuating market conditions they create. This uncertainty is prompting countries worldwide to seek voluntary agreements, with Japan also urging the United States to bring its auto tariff negotiations to a swift conclusion. There is, however, a cloud of uncertainty that lingers over the potential reductions in tariffs on Japanese automobiles, alongside fresh concerns about duties on pharmaceuticals and semiconductors. For instance, the recently announced 100% tariffs on certain chip imports to the U.S. left many Japanese chip supply chain companies scrambling to adapt. Meanwhile, companies from other nations, those planning for growth in the U.S. market, are seeing their stock prices soar. This highlights a complex landscape where different businesses are reacting uniquely to the same economic policies. Tokyo's government is actively pushing Washington to finalize an agreement that would cut tariffs on U.S. imports of Japanese automobiles, bringing them down from a previous high of 27.5% to 15%, which could have a profound effect on business operations going forward. 2 weeks after the announcement of this trade deal, Japan is now in a race against time to clarify the specifics to ease corporate planning for its prominent firms. Takanori Azuma, Toyota's finance chief, shared, predicting future market conditions has become exceedingly challenging. The company has adjusted its operating profit forecast for the fiscal year concluding in March, projecting earnings of 3.2 trillion yen, equivalent to $21.7 billion, reflecting these tariff-related pressures. While Toyota's shares dipped by 1.5%, Sony's stock surged by 4.1%, and Subaru's rose by 2.6%, which demonstrates the contrasting fortunes of companies within the same economic environment. On the whole, while some Japanese car manufacturers wrestle with pricing pressure because of the tariffs, others like Sony are enjoying improved financial forecasts, now estimating the tariff-related impact on their profits to be around 70 billion yen, a drop from the previously anticipated 100 billion yen. Interestingly, Honda decreased its expected tariff impact on profits by 31% and identified many lingering uncertainties. However, the company still plans to navigate through this turbulent environment. Despite the ongoing challenges, Trump has put forth a significant exemption for American manufacturers concerning the semiconductor tariffs. Companies that either produce chips domestically or pledge to do so will not be affected. Interestingly, while Japan is currently the largest foreign investor in the U.S., with investments totaling $819 billion by the end of 2024, Japanese chip companies have been hesitant to make substantial investments in U.S. manufacturing. Following these announcements, shares in Japanese chip manufacturing firms like Tokyo Electron fell by 2.7%, alongside a nearly 1% drop in Advantest. On the flip side, chip manufacturers actively pursuing expansion in the U.S., such as Taiwan's TSMC and South Korea's Samsung, saw stock increases of 5% and 2.5% respectively. In a noteworthy development, Japan emphasized that the U.S. agreed to maintain fair tariff rates on semiconductors and pharmaceuticals, ensuring that Japan's rates would not fall below those of other countries. Last year, Japan's trade surplus with the U.S. was nearly $70 billion, amid total bilateral trade amounting to about $230 billion. So what does this mean for the future? Could the contrasting experiences of these companies reflect broader trends within the global economy? The implications of these trade policies are far-reaching, and as we continue to see the repercussions unfold, we want to hear your thoughts. Are you aligned with the cautious optimism of firms like Sony and Honda, or do you share the concerns raised by Toyota? Let us know in the comments below.